My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, man, I'm just trying to save a little money here. My job is not just to entertain, but to teach you, explain things like what happened today. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. On a real tough day for you and your portfolio and me and my Chapel Trust. You know what I'm going to do? I'll take a different approach. I'm actually going to try to come out here constructive. I know what you're wondering. You're saying, how do you handle this new Trump tariff regime? Get out now? Sell everything? Sell. No. You just have to buy some different stocks and maybe trim some of the newfound riskier ones. You buy stocks that have a couple of important characteristics encapsulated by this one sentence. You want stocks of domestic companies with pricing power and with no slackening in demand or credit risk that do well in a slowdown. And that's it. That's what works. That's what we buy. That's what will get a higher price to earnings multiple in the market. And it's already started happening today. A horror show session where the Dow tumbled 1,679 points. S&P plunged 4.84%, and the Nasdaq plummeted 5.97%. It's painful to lose so many great stocks, classics, the techs, the enterprise software, the cyclicals, consumer discretionaries, but you have to pare them back because they don't work in this new world. Maybe when they get that much lower, but not yet, and maybe the president changes his mind. He seemed to give a little wiggle room this evening, but we don't know, okay? Only with phenomenal opportunities, maybe? All right, now we saw exactly what we're seeing today in April of 2000, when we recognized that the dot-com era was over. So you had to sell Qualcomm and Cisco and WorldCom, to say nothing of the newly minted dot-coms, most of which went under. In return, what did you have to do? You had to go buy Bristol-Myers, Procter & Gamble, Coca-Cola, textbook slowdown stocks. It was painful because it was too simple, and it happened over a week. Too ridiculous, but it worked as the dot-com implosion spared none of the old favorites. I was so bummed. I'd feasted off of Intel and Microsoft for years, but also off of tech junk like InfoSpace, Copper Mountain. Next thing you know, I'm discovering the wonders of the drug middlemen like McKesson. What a nightmare. But it worked. After dumping tech and bulking up on the slowdown stocks, my hedge fund finished up bad year, up 36%. We pulled it off because we recognized that the world had changed. Tech valuations had gotten too high while the fundamentals were falling apart. The good news is that's not happening to tech this time. Tech is good. Now we're just trying to find a price. Now, because of these brutal tariffs, we're facing a similar moment, though. About a dozen groups worked in 2000. So I'm going to dust off that 2000 playbook that I have, okay? I know it's 25 years ago, but I still have it, with stocks that investors will be willing to pay up for because their earnings won't disappoint even in a bad economy. All right, the first, the drug middlemen. These three, Cardinal Health, McKesson, and Cencora, which is the artist formerly known as AmerisourceBergen. They like to call themselves solution companies, and Cardinal really is. You can't kill these drug middlemen, and believe me, many politicians would love to get rid of them. But nobody's ever laid a glove on them. They are the original rope-a-dopers. Second, pharma. Never outthink this. You need to own at least one stock like Bristol-Myers or Abbott Labs or AbbVie. They are sedate and steady growers, with AbbVie and Bristol offering real good dividend protection, which is a lot more valuable now that rates are coming down. I like Eli Lilly, too, but it might be too flashy and aggressive at this moment. Right now, we want slow and steady, not revolutionary that looks like tech. Third, health insurers. These hated companies are perfect for this new market. Again, do not mess with what's going to work. Just go buy the best, and that is United Health. It has great systems and tremendous tech. I also like Cigna, but not as much as UNH. Got my permission to dislike these companies as much as you want, as long as you own them. Fourth, you want financial technology companies with no credit risk. Here, I go with our landlord. Yes. The Intercontinental Exchange, the owner of what people call the NYSE, the New York Stock Exchange, among a host of other stock exchanges. At this stage in the cycle, you never want to own a stock that needs people to do well, because fewer people will do well in this country, and the Fed won't help, as it'll be too worried about inflation from the tariffs. You buy the fintech names that have zero credit risk because people will soon be defaulting on their debts. MasterCard and Visa, by the way, they work too. They don't have credit risk. Fifth, you know what's really in the driver's seat here? Telco. The price wars are over, people. Verizon and AT&T have good deals. They both work. They've been working. AT&T is suddenly out-executing everybody else in the space. It also has the best chart in the entire book. Six, Low-price retailers that offer great value are so great here, and that means TJX and Costco. Right now, all sorts of retailers are ordering stuff as fast as they can to beat the tariffs, right? We heard that. They're ordering too much, though. They won't be able to sell it all, so what do? They dump their excess inventory, which is good inventory, to TJX, like they always do. Costco, subscription market with a club motif, fighting for low prices, fighting for you. Costco is where you go when you want to hoard ahead of the government-mandated price inflation from the tariffs. You won't regret going. You won't regret buying. I'll see you there Saturday. 7th, say you're a foreign government and you want to get on the president's good side. Historically, what you did was you placed big orders with Boeing or Lockheed Martin. These stocks are down today because it takes a bit of thinking before you realize that countries can probably get Trump to lower the tariffs they're paying by ordering big-ticket defense items from these heavy hitters, and it's a smart plan. Maybe that's what President Trump was talking about tonight on Air Force One when he said it was offered phenomenal deals. Maybe you'll see some of these countries buy a lot of our planes, a lot of our defense stuff. 8, what's a list of stocks that we're going to slow down, which is what we're getting without the consumer packaged goods stocks? Don't you have to have them? And they can't be challenged here. Procter & Gamble, Coca-Cola, Kimberly-Clark, they all have pricing power. They worked in 2000. They'll work again. They were able to raise price. Nobody balked. 9th, you're never going to go wrong buying the utilities here, even if lower rates haven't already spurred a decent move. I go with Duke or American Electric Power. Don't look at where they went today. They're so up. You think it's over, but it's not. Con Ed if you're chicken. Energy if you're aggressive. These stocks will all run to slow down, even though most of them had very nice moves today. They'll surprise you with how far they can go. 10th, you need some real estate investment trusts that don't have any credit risk. You know what? I'm going to go with Ventas, which is senior assisted living, and that's run by Ace Deb Cafaro. It's her time to shine. I really like the Realty Income 2-letter O. Got some retail risk, though. 11th, the insurance company's about to clean up here as they did before this. They'll do well when interest rates go lower, which is what's happening. They're raising prices with no real resistance. You know I like Chubb, which is the most careful of underwriters, and I had Hartford on recently. I really liked them. You have to be impressed. Finally, I want to give you one more name that has a little cyclicality and helps when a new housing development is going up, among other reasons. And that's the old Waste Management, WM. Now, it's a little out there because it does depend on building something, which depends on interest rates going down. But I do think rates will come down, even though it wasn't part of the 2000 playbook. Now, there will always be some anomalies. Today, the Justice Department granted Capital One the right to buy Discover Financial. This deal was in limbo. It's now happening. I really like it, but the merger approval was totally obscured by today's horrific tape. We're buying more for the CNBC Investing Club because I just want to have a bigger position in this one now that the Discovery deal is going through. It does have credit risk, but there's a transformation going on, and it's a special situation. And then there's NVIDIA. Okay, now listen to me for a second. Listen to me. It's down another 7% today. It's horrendous. I've been saying that, right? Have I hit that from you? Why NVIDIA? Because the White House blessed its goods that are made in Taiwan with no tariff. Too important, yet few noticed. I know there's a widespread belief that we're seeing a slackening in demand for AI infrastructure. All I can tell you is that I monitor this thing like a hawk, and there hasn't been a slackening. It's been in total acceleration mode, but nobody cares. And I know it's headed lower. But at least you know why I'm not selling. All others, they'll get interesting as they go still lower because their fundamentals are good. But you can't buy them yet. Their stocks are too high because people won't pay up for those earnings. Trump gaffed companies and their investors, but good today. In retrospect, we were all fish in a barrel, and now we're being filleted, beheaded, and fried. It's tough to even think about taking a chance with the old guard, just like 2000. Every time you stuck your neck out back then, the stocks went lower still. Bottom line, I know that there's nothing more exciting to invest in than tech, and tech will have its chance again in the future. But right now, in the April 2000 playbook, well, in charge, that book is, and that severely limits what you can own here. You now know what worked back then, and I bet the same groups will work once again. How about Joel in Ohio, please? Joel.
Thanks for taking my call, Jim. I've owned ConocoPhillips for a long time, COP, and like everything else, was down over 10 points today. What do you think of it?
I like it here. I would buy it. It's inexpensive, yields 3.25. It's one of the best run oils. You never really see this thing down like this. Let it be down when you see stock down 10, probably going to go down 3 or 4 more points, and then I would buy some. That's exactly where you want to be, and it's a great call. Michael in New Jersey. Michael.
Hi, Mr. Cramer. How are you? Booyah.
I am good. Booyah, Michael. Thank you for calling. What's up?
I was on the COMEX since 1991. I was a member there. On FCX, what's your opinion on that? Should I hold it? I've been buying it since,
Yeah, I want you to hold it. I mean, it was really a shame what happened to FCX. FCX has been going up because we need it for data centers, and the Chinese were ordering some. Suddenly, we've decided that the Chinese aren't going to order any, and the stock has given up so much of its gain. I would actually, and you're from the COMEX, so you know more than I do, but I think that this is a very good level to buy some. But if you want to really hedge it, why not buy Barrick? Because Barrick, symbol GOLD, has gold and copper. That might be the best way to go. Hey, let's speak to Robert in New York. Robert.
Jim, first of all, I want to just say this again, okay? If you recall weeks ago, you said this was going to happen. I mean, either I'm living in a fog, and every analyst on TV, we can't believe this. Oh, this is unbelievable. But if you listen to Jim Cramer, you would have had this called weeks ago, and you would have called the money. No, Jim.
Well, but to be fair, I thought that they were going to give real tariffs, not the kind of nonsense they did. And when I talk with them every day, and I was actually kind of saying, listen, this is the way if you want to explain it to people, because they knew that I was a fair trader, and they've known that for very many years, and they didn't do a good job. But how can I help you now?
But you did. But, Jim, you called this weeks ago, and you said it to me on the air. You were the one who called it, that this was going to happen.
Well, thank you.
So this is not a shock, okay? Anyway.
No, okay, thank you. You're very kind. Thank you. Thank you. I really mean it. Thank you. That is very kind.
But it's true. Jim, I was with my friends the other day at a great steakhouse having a steak at Bryan and Cooper's, and they were all worried about the stock market. And one of them suggested this next company, and I said, we must go to Jim and ask him, because I don't do anything without talking to you, Jim. That's the bottom line. So
Thank you.
This company that manufactures and markets a wide range of food and beverages, in 2024, the company struggled to regain momentum with the stock declining 23% throughout the year. Their products aren't really seen as a healthy option. But what makes this company right now safe is the dividend yield of 5.18%, the annual dividend yield. There's a potential of a turnaround, and the dividend yield is safe right now.
And what stock is that, Robert?
It's Kraft Heinz.
I mean, that's just a really poorly run company. I'm sorry, Robert. I mean, look, ConAgra's a better run company. It's got better yield. I can't buy a company that has that's just badly run. Anyway, look, right now we're back in the April 2000 playbook. Trust me, because I lived it and I did it. You know what worked then now, and there's no reason it can't work again. Tech will work again because it's not breaking down, but not yet on Mad Money Tonight. If today's sell-off response to the latest Trump tariffs, I'm telling you where I stand on the news and its impact. Then could stocks like Carvana and CarMax shift into high gear despite the tough market? I'm looking at the road ahead for the used car cohort. Plus, as the price of gold sits near new highs, as I mentioned, we have Barrick Gold CEO. Let's hear what he has to say, so stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.